afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore. David, good afternoon.
Hi, Salamat Tengah Hari, Brian. Thursday, down day. Yeah, markets are down today.
Markets are down today and we're going to get your insights as to why and how we can take advantage of this. But before that, let's take a look at crypto markets, which are still doing well. Bitcoin is at 20,396.6. It's up 1.39%. Ethereum is at 1,376.98. It's up 1.69%. Now, looking across to regional stock markets, we've got the Straits Times Index, which is up 0.43%. Bursa Malaysia is up 0.43% as well. The ASX All Ordinaries is up 0.11%. The Nikkei is up 1%. The Hang Seng is down 0.3%. And rounding up the numbers, we've got the Kospi, which is up 1.57%. Now, David, what's your view on market performance in the first half of the day?
I would say it was kind of directionless at the moment. I think they're trying to sort of find some kind of direction because Wall Street last night, rather than carry on with that sort of climb in share prices, they kind of paused for breath last night. And as a result, Asia was directionless. I think that's the best way of describing it. And I think they've been worried by a number of things, Brian. The first one was news that OPEC Plus is going to be cutting oil production by 2 million barrels a day. And just at a time when we have inflationary pressures, OPEC Plus doesn't seem to be helping by cutting oil production, which means that energy prices are going to be more expensive, and that's going to add more inflation, and that's going to put more pressure on central banks to try and sort of raise interest rates. So it is a bit of a confusing time, and people are scratching their heads as to why OPEC Plus or OPEC at the moment is so keen on cutting oil production when energy prices are already so high. I mean, aren't they happy with $88 a barrel? How high do they want it to go, Brian?
Well, David, if we take a longer term view, the view of that becomes a little clearer. Now, the long-term trend is really towards clean energy. We all know that. The other thing, the view that we need to also take is OPEC Plus has gotten used to high energy prices, and they are perhaps looking to sweat their assets and really milk the cow while they still can, without having to reinvest in exploration and so forth, which will happen if they ramp up production. So,
yeah, but don't they have a responsibility to the rest of the world? I mean, when you have a look at OPEC plus, people are dependent on energy at the moment. We haven't got to that stage where we have renewable energy, so we are still kind of dependent on things like oil and gas. So why are they doing this to us? Why are they? Why aren't they cutting off their noses to spite their face? Because, I mean, what is really happening is that interest rates are going to rise, and that is going to drive the world into a greater recession than we might originally have projected. So why are they doing that? Because if we go into recession, we're going to need even less oil. So, I mean, doesn't that hurt them over the long term?
Well, if we look back to history, David, if we look at what caused inflation in the 70s, I think the clues are there.
Right. Okay. Yeah. Yeah. Okay.
But
right.
David, sorry, go ahead.
Yeah. The other thing that I think is worrying people at the moment, why the markets are kind of on edge, walking on eggshells right now, is because of some big numbers coming out tomorrow. We've got the non-farm payroll, which is really sort of closely watched, I think, by market watchers, and also the US unemployment rate. And if those numbers are not favorable, then it could mean that the Federal Reserve may have to increase interest rates faster than expected. And I think if that were to happen, if we get some bad numbers on those non-farm payroll and unemployment, then I think what could happen is that the market next week could moderate. I'm not going to say dive, but I think it could moderate. So there are some things for, I think, investors to watch. The other thing, of course, is we've got some big earnings coming out next week, and people will be watching those earning numbers very closely. Because I think people need to realize that the share price is a function of the PE ratio and also the earnings per share. And the PE ratio is partly to do with interest rates and partly to do with sentiment, but the earnings per share is what is going to be driving share prices primarily. And if we get some good, strong earnings from US companies, then I think the stock market may, just rally. But if we get some bad numbers, which is what people are kind of suspecting will happen, then I think that could be a worry, because if earnings are hurt in some way in America, then I think it could be bad news for the market, Brian.
Then, David, I want to take a different view, put a different lens on for you in terms of the UK policy reversal. What's your thoughts on that, and how is that going to be perceived by Asian investors in particular?
Well, they had no choice, Brian. I mean, if you have a look at the UK, what choice did they have? You've got to balance your budget. You and I know. I mean, we come from a background where you know that you don't spend more than what you actually bring in terms of your salary. If you do that, then you're heading for trouble, because you have to finance that difference between what you spend and what you actually earn with your credit card. Yeah, I mean, with loans. And if you do that over the long term, then you are heading into a big problem. And that, I think, is the same problem that they have in the UK. You can't go cutting taxes that easily, because where are you going to be funding that spending from? The UK is committed to spending something like, I don't know, 100 billion pounds on helping people tide them over the winter period, because there is going to be higher energy costs for them. Where is that 100 billion going to come from? You don't magic it out of thin air. You have to fund that somehow. And temporarily, the Bank of England has stepped in and said, we'll buy those bonds from you if you want to issue those bonds. But that just means the Bank of England has suddenly printed more money. So we're in this confusing state. On the one hand, the Bank of England is saying that, we're going to be tightening monetary policy because of inflation. Then on the other hand, they're going, we're going to be printing more money in order to buy these bonds. I mean, is it quantitative easing or quantitative tightening? Which one is it? And I think somebody came up with this wonderful phrase called quantitative confusion. And I think, that is going to be something that many central banks are going to have to grapple with, quantitative confusion. Which side are you on, tightening or easing? And I'll leave you with that thought.
That's a good thought to leave us on. Thank you very much for coming on the show, David, and thanks for your insights.
Thank you.
I'm Brian Fernandez, and we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.